Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock with news. Global trade networks seem to be fracturing at a faster pace now. But first, there was an outsized jump in initial American jobless claims last week, up to 286,000, pushing the total number of people on these benefits to just under 1.6 million. Their insured jobless rate jumped to 1.1%, and while this is still incredibly low, it may well signal the economic slowdown is starting to hit the American labour market. And it also looks like some major components of American inflation are starting to ease. Mortgage interest rates fell last week back to under 7% and back to September's levels. And rents are falling, and American petrol prices are too, and back to year-ago levels. These three are large enough categories to be noticeable in household budgets. But markets don't think these reduced pressures will bring a change in inflation-fighting attitude from the Fed, and still see them raising rates from here. Separately, China is cozying up to Saudi Arabia, shoring up its energy supplies and going its own way on global trade. While Xi's trip there is mostly theatre, it does underscore the fracturing of the previous integrated global trade network. And it isn't a great time for China to try this, however. Its new grouping with Russia and the Middle East looks more fragile than the US-Japan-EU network. And India wants to be seen as a major power too, but it is unlikely to join up with a China-dominated bloc. In China, more evidence of the economic cost of their COVID-0 policies are coming to the fore. More than 40% of their car dealers went out of business in November, apparently, and car sales dipped sharply. Separately, Australia reported another jumbo trade surplus in October of $12.2 billion for the month. Container shipping rates continue to ease fast, down another 6% again last week from the week before. Again, it is China-related trade that is taking the heaviest reductions. They are now 77% lower than year-ago levels and 21% below the 10-year averages. But bulk cargo rates are not showing the same retreats. The US Treasury 10-year yield starts today at 3.49% and up 5 basis points from this time yesterday. And the price of gold will open today at $1,790 an ounce, and that's up another $7. And oil prices start today down another 50 cents from this time yesterday at just on $72.50 a barrel in the US, while the international Brent price is down to just over $77.50 a barrel. And the Kiwi dollar will open today at 63.8 US cents, and again a little firmer than this time yesterday. Against the Australian dollar, we're a half a cent softer at 94.2 Australian cents. Against the euro, we're at 60.4 euro cents and down slightly. That all means our trade-weighted index starts today at 72.1 and very little changed. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by